We are back finishing up chapter 8. This is video 6 for that chapter. So we've been talking these last couple of videos about substantive tests, right? We talked about substantive tests for prepaids and accruals. We talked about substantive tests for PP&E. And now we're talking about substantive tests for other costs and expense accounts. So kind of just wrapping up the substantive tests. We've talked about the main accounts in the cycle, and I just remember there's always a few other random costs and expenses: sales commissions, depreciation, purchases, legal expenses, janitor, just random services, things that aren't really a purchase of a thing, where there's a receiving report, but it's an expense, yet all the same. A lot of times you can use analytical procedures for these. You can compare last year's to this year's for janitorial expense. You can compare sales to the percent of commission to find out sales commission expense. You can use analytical procedures for a lot of these. It's pretty easy. You can agree to a different account, right? So depreciation expense should match to the increase in accumulated depreciation, right? Things like that. You can vouch and trace for details, pull those invoices, look at the numbers, just depending on what kind of expenses you're dealing with, you should be able to figure that out. And the last thing I want to talk about in this chapter is fraud in accounts payable. So here's the deal. Fraud is a significant risk for accounts payable. Why? Well, because a lot of employee occupational fraud occurs in this part of the cycle. They are either purchasing things for themselves, all right, and using that stuff or selling that stuff, or they are doing fake vendor invoices, trying to get a check cut to themselves out of the company. So they'll provide a fake invoice knowing it'll get paid. They know how to work the system to get the invoice paid. Sometimes they'll go so far as creating a vendor for themselves and actually becoming a vendor, like sell them some kind of materials or inventory that is maybe lesser quality or that they overcharge for, and they're actually delivering a good or service. But a lot of times they'll do a service into a fake invoice, like, oh, who's going to know if pest control treatment came or not, right? So they'll put in an invoice for pest control treatment. So this is a big occupational fraud. Depending on the size of the client you're auditing, may or may not rise to the level of materiality, but you always have to consider it. So these are things you should look for when you're thinking, could occupational fraud create an account payable that doesn't really belong to my client, right? So the existence assertion, the accounts payable are overstated, right? So some employee of your client is out there doing something naughty, and your client ends up with an account payable, right? What could happen? So you need to look through invoices for things like in all of them really, any receiving report, purchase order, invoices. If you see photocopies, that's very frequently a sign that the employee has taken an invoice and altered it, and then put a photocopy in there so you can't tell it was altered. Invoices. So this is interesting when an employee has created a fake vendor and they're sending bills and they're getting checks paid to that fake vendor and cashing them. It's very possible you would see invoices in numerical order, which would be weird, right? So imagine you have a vendor that does janitorial service, and they have a bunch of clients all throughout the city. Well, every client every month gets a bill. All right. So if they had 50 clients, the first month would be invoice 1 through 50. The second month would be invoice 51 through 100, right, and so on and so forth. Right. So it's not like any one client would get 2 invoices with the same number, but if you're creating fake invoices, you sat down with QuickBooks or Peachtree or something and just made some fake invoices, they might be a numerical sequence, which is not something that would really happen. And vendor invoices always in round numbers, right? So you're just making up. I need $500. How many purchases really end up being $500? Vendor invoice is slightly lower than a review threshold. So if I'm a purchaser, if I'm a manager at a store and I'm authorized to purchase things up to $500, after that I need my divisional manager's approval or something. Well, I'm going to buy things for 480, 470, stuff like that, right? Only PO boxes, right? Vendors, that would be a fake vendor, right? You don't want to get caught, so you make up a PO box, so you use that. No telephone. You should always use your software to match employees to vendor addresses. Some people are stupid enough to use their home phone and their home address. Multiple vendors with the same address and phone number. Just take a sample of the invoices and make sure that they're only from approved vendors. If your clients are only using approved vendors, that should be a good sign. Might look through the invoices and see if there's any mail drops. So that's those little, I don't know if you've ever seen like a shopping center that had like a UPS store or a Mailboxes R Us or something like that. And so again, a way to not get caught. You're using these fake addresses that look like an address. All right, so anyway, you got to keep fraud in mind, especially under accounts payable, because your client may end up with an overstatement of payables. Again, it may or may not be material. Depends on the client. All right, how much you'd really test for this stuff, but you would want to test for it. All right, so that wraps up Chapter 8. Good job, everybody. Go ahead, and for this chapter, all we're going to have is a quiz. So have a great one.